What's up, y'all? This is Sunko, the Korean bro. Today is um 2022, December 15. Uh let's look at economic calendar first. We have a lot of events today. Uh Most of all, we have a FOMC meeting today and the news about interest rate. Okay, let's see. Uh Okay, today is December 15, and we have initial jobless claims. 211K is actual point, and 230K was forecasted point. Hmm. Initial jobless claims measures the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest U.S. economic data, but the market impact varies from week to week. So last people filed for the unemployment insurance for the first time. Last people filed for it. Mm. Uh, and we have Fed interest rate decision, which is 4.50%, which is exactly the same as forecasted point. Mm. Federal Open Market Committee members vote on where to set the rate. Traders watch interest rate changes closely, as short-term interest rates are the primary factor in currency valuation. Mm. Mm. Let's go to Yahoo Finance and see how people think. Okay, the Fed doesn't think its recession forecast is forecasting recession. Okay. Mm. The Fed doesn't think its recession forecast is forecasting recession. Morning brief. Okay. The Federal Reserve expects an economic downturn next year, but just don't call it a recession. In its latest summary of economic projections released Wednesday, Fed officials said they expect GDP growth at the end of next year to stand at just 0.5%, while the unemployment rate is set to rise from its current level of 3.7% to 4.6%. Hmm. These projections were released alongside the Fed's last monetary policy decision of 2022, which saw the central bank raise the target range for its benchmark interest rate by 0.5% as expected. Asked during a press conference following its announcement whether these forecasts, flat growth, rising unemployment, imply recession hitting the economy next year, Powell demurred. I don't think it would qualify as a recession because you've got positive growth, Powell said. I don't think it would qualify as a recession because you got positive growth. Though as NBC's Brian Chong noted in his question to Powell, the Fed's unemployment forecast suggests some 1.6 million Americans are going to lose their jobs in the next year. Hmm. There will be some softening in labor market conditions, Powell said, and I wish there were a completely painless way to restore price stability. There isn't. And this is the best we can do. So this is what it is. A Fed already knows that labor market uh will struggle at some point, but uh it's what we have to go through, because to make price stable, we have no choice but to face it. It's what Fed thinks. So there will be softening in labor market conditions, Powell said, and I wish there were a completely painless way to restore price stability. There isn't, and this is the best we can do. And they keep saying that they will raise interest rates, right? And and it's gonna go on for some period next year, and who knows, year after that. Um, of course, Wall Street is already a step ahead of Powell. The expected increase in the unemployment rate between this year and next year has happened without the economy falling into recession. Ryan Swift, chief U.S. economist. Oxford Economics wrote in a note on Wednesday. As we've seen in numerous forecasts for markets and the economy next year, consensus among most strategists has hardened around the idea of a downturn hitting the economy in the second or third quarter of 2023. Sending the stock market falling, and expectations that the Fed will react to recession by easing policy at most strategies, batching the stocks getting back to unchanged by the end of 2023. Okay, but with Tuesday's inflation data showing that the Fed's aggressive rate hikes this year, which totaled 4.25% cumulatively, have started to have some effect in slowing prices. Economists seem increasingly skeptical that the Fed hasn't misjudged the efficacy of its own program, which is aimed at getting inflation under control and back to its 2% target. Hmm. Okay, so we're already seeing some change in slowing prices, right? Tuesday's inflation data showing that the Fed's aggressive rate hikes this year, which totaled 4.25 cumulatively, have started to have some effect in slowing prices. Economists seem increasingly skeptical that the Fed hasn't misjudged the efficacy of its own program, which is aimed at getting inflation under control and back to its 2% target. So Fed doesn't see this interest rate hike as a cause of recession, and next year we'll sure have growth in our economy. But the fact that that they will raise interest rate uh exist, right? So anyway, annual inflation rate drops to 7.1%. Despite the increasingly compelling evidence that core inflation will fall sharply next year, the Fed doubled down on its hawkishness today. Hmm. Paul Ashworth, the chief North America economist at Capital Economics, wrote in a note to clients on Wednesday, "It's hard to know whether Fed officials really believe their own economic and rate projections. or whether they are making a point to try and reverse some of the loosening in financial conditions over the past month. Referring to the sharp drop in Treasury yields and rally in stocks since the Fed's November policy decision. Still, whether Fed officials want to call next year's economic outlook recessionary or not, their own forecasts have the central bank reacting to just that scenario. Interest rates are expected to top 5% in 2023 before sliding back to 4.1% in 2024. The Fed remains willing to risk a recession in the labor market in order to bring inflation down. Okay, that's the point. The Fed remains willing to risk a recession, right, in the labor market in order to have that inflation under control. And if anything, the December projection suggests the risk has risen, not diminished, wrote Michael Goppin and the economics team at Bank of America Global Research. Rising unemployment, below potential growth, and 100 basis points of interest rate cuts. If it walks like a recession, talks like a recession, call it whatever you want. So, hi. Okay. Let's keep doing okay, let's get back to where I left off. Anyway, to sum up, interest rates will rise next year and we'll have a recession for sure. But the Fed doesn't see it as a recession. It's something that we gotta go through to have the inflation under control. And it's gonna be tough because a lot of people will be laid off and we'll have below potential growth and 100 basis points of interest rate cuts. But then to have that inflation under control, we have to go through. And that's the summary of this article. So we'll have to see. Okay, here is another article about interest rate news. Powell sees rates higher for longer, but market doesn't buy it. Okay. Federal Reserve Chair Jerome Powell says the central bank has more work to do in raising interest rates and vanquishing inflation. Investors on Wall Street seem to see the outlook for 2023 differently. Okay. In a 45-minute press conference after the Fed hiked rates by 50 basis points to the highest level since 2007, Powell sought to dispel any notion that the central bank would back away from its fight to bring down inflation despite adding price pressures and mounting fears of job losses and a recession. We'll still have ways to go, he said on Wednesday, after the Fed released forecasts of further rate increases next year. We'll stay the course until the job is done. Okay. Their ultimate goal is 2%, and it is currently running 3 times that, which is 6%. And here it says, and made it clear that the central bank is not contemplating cutting rates next year, no matter what investors might think. So there's a Jerome Powell who has big plan, and there's a central bank who really acts, and they are not contemplating cutting rates next year. Okay. The Fed won't reduce rates until it's really confident that inflation is coming down in a sustained way, he said. And there will be some time. And let's get to bottom. The Fed still has an unwavering focus on getting inflation back to target, Okay. Okay, that's about it. Hmm. Okay, I get it. Let's go to motleyfool.com and read some of new articles, okay? Hmm. Is Pinterest stock a buy now? Is Walgreens a buy? Why is Sabra Healthcare's dividend yield so high? Does the bill that could ban TikTok made Meta a buy? Okay. Take sell off one top growth stock down 71% to buy before it starts soaring. These three stocks are set to soar in the next bull market. Hmm. Okay, let's look at chart of a Pinterest this time. Current price is 26.22. Its all-time high was 69.07. In the year 2018, we had revenue 755.93 million. In the year 2018, its price was about 29.85, which is about the same price as now. Hmm. And in the year 2021, we have revenue 2.58 billion revenue. Okay. So, see, for growth stock, Pinterest is well priced. User growth has started to rebound after several quarters of declines, and Pinterest revenue growth has slowed due to macro headwinds and difficult comparisons. Hmm. Can the social media stock make a comeback? A social media sleeper? Pinterest's most recent earnings report isn't going to turn any heads in a challenging environment for digital ad stocks. Okay, so I get it. So during Corona period, a lot of advertising company struggles, uh, especially digital ad stocks. Revenue grew just 8% or 10% in constant currency to $684.5 million, and adjusted EBITDA fell by 62% to $77.3 million as the company ramped up spending to drive future growth. Hmm, okay. Guidance wasn't particularly encouraging either. Management called for mid-single-digit revenue growth and expected adjusted operating income to decline again in the fourth quarter. However, there were some promising signs in the report. Its user base returned to growth on a year-over-year basis, with monthly active users inching up from 444 million to 445 million, while sequential growth was even more impressive, up 3% from 433 million monthly active users in the second quarter. The company continued to grow average revenue per user as well, and increased 11% globally to $1.56 and 15% in North America. Its most important market to $6.13. Though its financial growth may be monetarily impacted by macro headwinds, the company continues to improve its product both for users and advertisers. It tripled the video content and forged a new music partnership with Warner Music Group and others to expand the music experience on the platform. It also launched the popular Shuffles app, a social media interactive college tool that allows users to share visual content in a creative way. So, although they are having another headwinds, um, they still are growing because they have a partnership with some music companies, and plus they're mm, what is it? They continue to improve their product both for users and advertisers. Hmm. And plus, they also launched the popular Shuffles app. Hmm. It's a college tool. Okay. Why the worst could be over for Pinterest. So here's what author thinks about Pinterest. While its user base returning to growth, including in North America, where the company said the users grew sequentially for the first time since the first quarter of 2021, Pinterest seems to have safely returned to steady user growth. It's seen an especially strong influx of users from Gen Z, so especially young generation, use this platform, and a lot of new users uh, are coming. Right. Okay. It's also worth noting that even though Pinterest revenue growth has slowed, it was still faster than peers like Meta Platforms, Snap, and even Alphabet in the third quarter. So, well, some people and the fact tells us that its growth is slow and it's slower than usual. But when it's compared to other companies, it's relatively large because companies like Meta Platforms, Snap, and Alphabet, they were not so high. So, hmm. Anyway, CEO Bill Reedy said the return to user growth meant the company had largely lapped the headwinds from the pandemic onward. The stock has increased by more than 60% since they bottomed out in May and has even gained the attention of activist investor Alan Management, which recently formed a long-term partnership with Pinterest, including a gaining in both Borset. Hmm. So let's get to bottom. Is Pinterest stock a buy? Pinterest has another advantage over most growth stocks. The company is profitable, at least on an adjusted basis, having posted an adjusted EBITDA of $246 million through the first three quarters of the year. Based on analyst expectations of adjusted earnings per share of $0.61, the stock trades at a price to earnings ratio of just over 40, which seems like a very reasonable price to pay for a stock with the growth potential of Pinterest. Okay, while we don't know when the digital ad market will recover, it will bounce back eventually. Pinterest looks poised to see revenue growth accelerate given the rebound in its user base, improvement of its ad product, and unique features of its platform. Unique features of its platform and their user base and improvement of its ad products. All three will help them grow eventually. Okay. Hmm. We'll see. Mhm. One top growth stock down 71% to buy before it starts soaring. And what do we have? One we have is Teladoc Health. Okay. A struggling tech sector and a waning pandemic have weighed on Teladoc stock. Struggling tech sector. Even in the meat of the worst bear market in more than a decade, the company has continued to generate growth. Secular tailwinds, the silver tsunami, and Teladoc's industry-leading position should help the stock bounce back. Hmm. Okay, let's get to bottom again. The time is now. Taken in total, the evidence suggests that Teladoc Health is well positioned to benefit from the still growing, albeit slower adoption of digital healthcare. While there's no replacement for an office visit in some circumstances, for patients with issues that aren't critical, telehealth is well on the road to becoming a widely accepted standard of care. Over the past year, Teladoc has cratered down 71%. That puts the stock squarely in bargain basement territory, selling for less than 2 times next year's sales, its lowest valuation ever. That's not to say the stock couldn't fall further from here. The market is littered with examples that prove otherwise. However, given the company's history of growth, its large and growing list of opportunities, its industry leading position, investors would do well to buy the stock now before Teladoc Health starts to soar. And next one we have Airbnb, Shopify, and Roku. Well, they are the older ones that I covered already, so I'm just gonna skip it. Um, and next we have Atlassian, Nvidia. Mm, mm, okay, let's read about Atlassian. Okay, Atlassian. Let's look at price of Atlassian. Atlassian Corporation. Okay. 2019. Okay, Atlassian specializes in productivity and team collaboration software. Team collaboration software. Okay. The company is best known for Jira, a family of products that help business plan, track, and manage work across teams like development, operations, marketing, and human resources. Okay. But its portfolio also includes solutions for IT service management, knowledge management, and visual collaboration. Atlassian benefits from a somewhat unorthodox go to market strategy. Whereas many software vendors rely on a direct sales force, Atlassian relies primarily on self service sales and word of mouth marketing. That strategy has kept its sales and marketing costs low over time, enabling the company to focus on product development. To that end, the Atlassian platform comprises a broad number of easy to use products, many of which have achieved a strong market presence. So, unlike other companies, they are focused on um, development of their products instead of spending much money on marketing because they believe in the word of mouth marketing, and it's been working pretty well, I guess. Uh, so, uh, from the place where I work at, I've seen this service before. It's not that I use their service, but I've seen it. And from what I read from this article, it seems like they are offering services like productivity and team collaboration software, and their product helps business plan, track, and manage work across teams like development, operations, marketing. Okay. This year, IT search specialist Gartner recognized Atlassian as a leader in enterprise planning and IT service management software. Better than research company G2 named Atlassian the seventh best software company in the world in 2022 based on its strong market presence and high user satisfaction scores. Atlassian reported solid financial results in the first quarter of fiscal 2023. Revenue climbed 31% to $807 million year over year, and free cash flow increased 31% to $76 million. But some investors still rush to sell the stock. as management lowered full-year revenue guidance in response to macroeconomic headwinds. Okay, some people still sell stock because their guidance, um, in response to macroeconomic headwinds, their goal is their lowered full-year revenue. Okay. Fortunately, Atlassian remains well positioned to create value for patient shareholders. Atlassian combines work management, IT service management, and enterprise planning tools on a single platform. That strategy simplifies operations and reduces costs for customers and drives more customer utilization over time. In fact, in spite of macroeconomic headwinds, net revenue retention stayed above 130% in the most recent quarter, indicating that the average customer increased its spend by more than 30% over the past year. With that in mind, Atlassian puts its addressable market at $29 billion, and management says that figure is expanding at 14% per year. For that reason, investors should have confidence in Atlassian's ability to reaccelerate revenue growth in the future. In the meantime, shares trade at 12.1 times sales, just above the 5-year low of 9.9 times. That creates an excellent buying opportunity. Let's go to profile. Currently, 9,800 people are working at this company, and their main headquarters is located in Sydney, Australia. So, Australia company. Okay, here it says it's possible with teamwork. Solutions are designed for all types of work, more workflow across teams while connecting back to company goals. Jira, Confluence, Jira Service Management, Trello. I've never used this platform. But I'm not sure if I'd have to use this one. I have to have that on my portfolio, and we'll see how this company do in the stock market. Okay, so Atlassian, it's gonna be on my portfolio. Okay, this is an interesting article. A bull market is coming. Here's how the smartest investors are preparing. While the stock market is often unpredictable in the short term, a bull market is on the way. Investing during the market's low points can lead to higher earnings during the upswing. The next one we have PayPal and Cloudflare. I already covered PayPal last time. PayPal is a company that deals with digital transaction, and they're like kind of leader in this sector. They already have a lot of users, and people tend to buy more products if they find a PayPal in the shop that they visit. So let's read this out loud again. And here's the good news about PayPal. Again, new partnerships with Apple and Amazon. Okay. PayPal is the most accepted digital wallet in North America and Europe, and ranked as the most downloaded digital wallet globally through the fiscal first half of 2022. The success stems in large part from its two-sided network. Unlike traditional payment processors, PayPal offers financial services to both merchants and consumers, meaning it has built trust on both sides of the transaction, supercharging the flywheel effect that powers its business. Thanks to the advantage, PayPal understands customer spending habits better than most payment processors because they have a lot of data that can show uh, spending habits, right? Because in the past year they've been accumulating the data, right? And uses the data to prevent fraud, mitigate risk, and drive sales for merchants. In fact, CEO Dan Schulman recently told investors people are 2 times more likely to shop when a PayPal button is present, with huge network effects where some like 8 times larger than the next wallet button out in the market. Hmm. So people tend to shop more if they see PayPal button because they have trust, right? Despite a challenging macroeconomic environment, PayPal reported reasonably strong third quarter results. Revenue climbed 11% to $6.8 billion, and its generally accepted accounting principles. Operating margin improved to 16.3%, its highest level in the last 4 quarters. On the bottom line, GAAP earnings soared 26% to 1.15 per diluted share. Hmm. Looking ahead, shareholders have reason to believe PayPal can reaccelerate growth as economic conditions improve. The company estimates the addressable market at $110 trillion, and recent partnerships with Apple and Amazon could help it gain market share in the coming years. Hmm. And in the 2023, US consumers will be able to add PayPal and Venmo branded cards to their Apple wallets and use them anywhere Apple Pay is accepted. So since they are having partnership, it's likely that people who use PayPal can also use PayPal within uh, what is it, Apple Pay, right? That could pay help gain share in physical retail as Apple Pay is the most popular in-store mobile payment platform by a wide margin. Likewise, US consumers can now pay with Venmo on Amazon. That could help PayPal gain share in digital retail as Amazon is easily the largest e-commerce company in the US. So we have uh, Apple, which have uh, what is it? Is the most popular. Apple Pay is the most popular in-store mobile payment platform by a wide margin. In-store mobile payment platform. Okay. Anyway, those catalysts drive shares price appreciation when the next bull market rolls around. In the meantime, shares currently trades at 3.2 times sales, a very reasonable price compared to the 3-year average of 9.2 times sales. Investors should jump on that buying opportunity before it passes. Okay. Cloudflare. We have Cloudflare, and what else we have? Atlassian, Cloudflare. Okay. Cloudflare. Cloudflare makes the internet faster and safer. Its global cloud platform improves the performance and security of corporate software and infrastructure while freeing customers from the costly burden of maintaining their own network hardware. So, so for you to use internet, you have to have like a set-top box or some kind of device that helps you have internet, right? Mm. But with the help of a Cloudflare service, you can use internet easily. Mm. Cloudflare also provides developer tools that help business build and deploy applications, websites, and video streaming experiences. And it recently added data store solutions to its portfolio to augment its developer platform. Cloudflare benefits from immense scale. The network shares a direct connection with every major enterprise, public cloud, internet service provider, allowing it to deliver content to 95% of internet users worldwide within 50 milliseconds. Hmm. So they're expanding their services to let people use service easily. Okay. They make Cloudflare the fastest network in the world, and that advantage has fueled tremendous demand. In fact, Cloudflare is the market leader in content delivery network software and apps development platforms. Content delivery network content delivery network software, and apps development platforms. Okay. Not surprisingly, the company is growing at a rapid clip. Its customer count climbed 18% to 156,000 over the past year, and the average customer spent 24% more, evidencing the stickiness of its platform. So people who use their platform uh, tend to keep using it, which is a good sign because customer feel that what they offer is pretty useful, right? Hmm. Cloudflare achieved an annual revenue run rate of $1 billion in the third quarter. And management says that figure will grow fivefold to $5 billion by 2027. It implies annualized revenue growth of 38% over the next 5 years. That type of growth should lead to a big rebound during the next bull market. Okay, let's go to marketbeat.com next, and let's see what interesting articles we have tonight. Hmm. Okay. There are a lot of articles about interest rate. Hmm. And it's not only the states. Hmm. Okay. Anyway, it's not the only the states that raise interest rates. Here it says a Bank of England and Swiss National Bank. Hmm. Britain's central bank on Thursday raised its key interest rate again, but toned down the pace as inflation shows signs of easing, mirroring action by the U.S. Federal Reserve and European policymakers. Okay, they raise interest rates, but tone down the pace as inflation is. Hmm. Okay. The Bank of England raised the benchmark rate by half a percentage point to 3.5%, the highest level in 14 years. It was the ninth consecutive increase since December 2001 and follows last month's outsized three-quarters point hike, the biggest in 3 decades. So it's not only the States, but also Britain has been raising interest rates for 9 consecutive times. Mm, okay. And also, the Swiss National Bank. Mm. The Swiss National Bank raised its key interest rate Thursday, as the other central banks in Europe are starting to follow the playbook of the U.S. Federal Reserve in a bid to tame inflation. So, along with the movement of central bank located in the states, a lot of banks in the Europe are also raising interest rates. Of course, till the inflation is under control, they could possibly raise interest rates. Hmm. Okay, Switzerland's central bank hiked its policy rate by half a percentage point to 1%, the same pace that the Fed chose Wednesday. And the Bank of England European Central Bank followed a day later. Norway's central bank did a smaller quarter point hike Thursday. Hmm. Okay. 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 Time is up, and I'm going to see you tomorrow. Okay. I'm gonna see you tomorrow. I'm done reading, so see you and bye bye. Have a good night. Bye, 형. Bye bye.